you call it trading, I call it gambling. You're just hoping that people don't say, you know what, this is too risky for me, I'm going to sell it off. You're just hoping that it goes a little bit longer.
Welcome to another edition of the McAnulty Method, where financial expert Frank McAnulty is going to share his wisdom and insight about financial matters with us so that we might live a healthier financial life. Joining him today is Colin Sorrells as our resident expert, sort of, on cryptocurrency. At least he tells me it's sort of. We'll find out. Now, we are going to be talking about cryptocurrency today, Frank, and I'm very excited because I know almost nothing about it. But before I unleash you two guys, I just want to let everybody know who's watching that we have a new LinkedIn page. The McAnulty Method has its own LinkedIn page. If you look down below in the description, you'll see the link. So I hope you visit and join us and then shoot us your questions and all that good stuff. And now, back to the question of the hour. A lot of students, a lot of young people they've jumped on the crypto train. Now, is this a good thing or a bad thing?
Well, Bill, it depends on how you're doing. I mean, I personally know people that have made $1 million trading Bitcoin. So for them, it's a great thing. But really, what is it? You hear about this thing, and it was created on a computer, and it's this blockchain technology that is supposed to be the newest thing. But I have a problem with how Bitcoin has a real value. Colin, what do you think?
Yeah, so it's that virtual currency. From what I'm told, you talk about blockchain. Bill said in the intro, sort of an expert, because I don't know what blockchain is, but the idea is it's supposed to be a more secure form of payment. It's supposed to be harder to counterfeit. But I agree with you. I think when we start talking about investing in it and how you're doing in it, there's some real issues with just the underlying value of Bitcoin or any cryptocurrency for that matter.
Well, maybe that's got to be my next question is, how is the value determined? Is it based on anything?
No, that's kind of the issue. People, I think I was listening to a Warren Buffett, the legend, giving an interview to somebody, and they asked him, well, what do you think about crypto? Would you invest in it? And his point has been that, everything we've invested in, usually speaking, whether it's real estate, stocks, bonds, anything there, if you dig deep enough, there's an underlying value to it. But cryptocurrency has no underlying value. If I invest in it, there's no return on investment. All it is, his big line was, you're just hoping the next person pays more than you did for it.
Frank, that sounds a little bit like a Ponzi scheme to me.
Well, in some ways it sort of is. So I'm looking at the chart right now of Bitcoin. And now if we would have jumped on the Bitcoin train back in October of 2020, it would have only cost us $10,000 per Bitcoin. It went all the way up to almost around 65,000 in April, came down to 30,000, sometime around July, and now it's at $47,200. That's a wild ride. And there's, if it's a company, let's compare it to a high tech company that quadrupled in value. Usually it quadruples in value because it's actually the company's accomplishing something. It's generating sales. It's building a business that it's building value. You're right. Bitcoin and all of these other ones are truly something that just, as long as there's a bigger pool to buy it, you're going to be okay. So once again, I go back. I know people that have made a lot of money. So you can't fault that. But when's somebody going to say, wait a minute, the emperor has no clothes? Um, Ethereum is the other one that actually I bought $100 of each of these. That's a while back. My daughter was bugging me about doing it. I bought $100 of Bitcoin and $100 of Ethereum. Um, Ethereum's gone from $360 all the way up to now almost $3,400. But once again, it's a currency that somebody just created on their computer. Dogecoin, which people don't even know how to pronounce it, or there's Dogecoin or Doggy Coin, because there's a doggy on the symbol, was a joke. These guys just made it up as a joke. But now all of a sudden, because people feel they should buy it, it has value. So that's what worries me. There's absolutely nothing backing it up. And people say, well, there's nothing backing up the dollar either. It's just the full faith and trust of the United States government. I don't trust them at all. But there still is an economy here. There's companies making things. There's companies making profits. So there is something backing it up. So,
well, then let me ask you guys this. It does seem, like I said, it sounds almost like a Ponzi scheme to me. So why has it really taken off the last few years?
I think it's what Frank's talking about. It's this fear of missing out. We always use the FOMO investor. He knows people who've made $1 million on this thing. If your friend is coming to you and saying, hey, look at all this money I'm making, because at the end of the day, who cares? Who cares if it's based in something real if you make money on it, right? At the end of the day, you came out ahead. You should care, but most people don't. And it's just fear of missing out. That's, a big driving point for a lot of companies during this time, and crypto in particular is, people, I saw every social media post in the world from all these people on Instagram in June saying, well, if you had bought Bitcoin when it fell to $4,000 at the COVID crash, you'd have this much money right now, and so people are saying, well, I can't miss it again. I can't miss it again. And, so they're just jumping on and crossing their fingers, I think.
What's going to be interesting moving forward is most major governments are looking at cryptocurrency as potentially taking their own money to cryptocurrency. I don't know if that's going to help the other ones or destroy the other ones. That's the problem, because there's really nothing behind it. If one of the three of us actually knew a lot more about computers than we do, we could sit here and come up with the McNulty method cryptocurrency and say, hey, we're going to sell it for 1/10 of 1 cent. Here's how you mine it.
But I think you're getting to a good point there, Frank, is, these governments are looking at cryptocurrency, but, as you just said, we could sit here and make a cryptocurrency. So why would the government, I guess, buy, your Bitcoin and say, we're now using Bitcoin as our currency and not just make their own cryptocurrency? And I think that further hurts the idea of what's backing this up. What's the long-term plan here?
Well, I agree. Here I'm looking at the Coinbase website right now. The currencies you can trade on Coinbase. Now, we all know Bitcoin. Ethereum's fairly well known. But the next one is Cardano. No idea what that is. Tether, Solana, Polkadot. There's a Polkadot currency that has a market cap of $32 billion. Doggy Coin, $31.5 billion. Uniswap, $14.8 billion. Chainlink, 12.5, and on and on and on. We're down here at EOS, only 5 billion. I keep going. Engine Coin, 1.4 billion, and it keeps going down into the hundreds of millions. And let's see, how far can I go? Down to let's go TrueFi, 78.5 million. But there must be easily 100 virtual currencies that people have created. And quite honestly, they only have value because as long as people will pay for them.
Well, with that in mind, I mean, as you were reading off those names and like what they're all worth is pretty impressive. And we all know somebody who made a ton of money, or at least know somebody who knows somebody who made a ton of money in crypto. So I would love you guys to tell us why crypto is such a poor investment.
Well, because it's not an investment. It's a trade. You invest in something that an investment is something that has true value. It generates income. It creates value through its operation. And I know people are going to argue, well, you can invest in art. Well, it's not really investing. You're trading art. You're hoping somebody's going to pay you more than the $64 million you just paid for a painting of sunflowers that was done by a guy 400 years ago. When in all reality, I could take you to a shop in Saigon where they'll paint you that exact same painting down to the brush strokes for about $300.
Well, and it's funny because art, what it's worth, a lot of it is really subject to what's popular right now, what's in fashion, and it seems a little bit like crypto is the same way. Colin, what do you think?
Yeah, with an investment, at least for myself, and Frank talks about the difference between a trade and investment. If you're going to invest in something, there has to be, at least an idea of what the exit strategy is going to be. You see maybe the business is going to get to this point, and I can sell off my position and it'll be worth something because cash flow has gotten to a certain point. With, I brought it up at the beginning with crypto, you're just, you call it trading, I call it gambling. You're just hoping that people don't say, you know what, this is too risky for me, I'm going to sell it off. You're just hoping that it goes a little bit longer so that somebody else will come around and fall in love with it and be willing to pay just a little bit more than you did for it. But there's no exit strategy. You don't know when you're going to sell it. You don't know, how it's going to get to a point where you made money on it. You're just buying it and hoping tomorrow it's worth more than it is today.
Let me bring up an example that's, I love going to Barrett-Jackson, watching the cars get sold. Everybody says, "Oh, I'm investing in classic cars." No, you're just buying them and hope you can sell them for more later, but they're cool. Well, we're starting to notice a trend that the cars from the 40s and 50s, Model A's and Model T's, have already lost most of their value because there's no one around anymore that really cares about those. Whereas now the cars from the 40s and 50s are starting to drop off because, quite honestly, the people that like them are all dying off. 60s and 70s are going to go next. You can spend an inordinate amount of money on a 1972 convertible Hemi Cuda, and because there's only one of that color left in the world, that's probably going to always have good value to a car collector. But eventually, like you said, Bill, it's not going to be of interest to people. Look at antique furniture. Does anybody buy antique furniture anymore?
If they do, it's mid-century modern.
Right. But the old stuff from the, that people used to think, oh, this is really cool. No one wants them. So that's the worry with Bitcoin. Eventually, there's going to be the doggy coin try to come along. There's going to be the McNulty method coin. There's going to be Bob coin or something. And let's make that worth more money. So there's no underlying value associated with it.
Okay. I'll buy that. You guys have talked me out of it almost. I want to know now, though, are there any pros to trading crypto? Is there anything to recommend it?
Well, even some of the experts are now saying it won't hurt you to have 5% of your portfolio in crypto. Okay. And that's sort of like any portfolio Say, okay, I can put 5 to 10% of my money in really risky stuff. Goes up, great. Goes down, won't hurt me too much. Goes away, knock the end of the day. And so, yeah, if you have that FOMO, fear of missing out, and you want to make sure you get in, you better start reading out. Okay, what's going to be the next hot one? I'm sorry, Dogecoin's, $47,000 a coin. A week ago, it was $52,000 a coin. Now it's 47. What's it going to be next week? Is it going to be 52? It's going to be 42. If I were wanted to play in this a little more, I would probably go for the next 3 or something and spread some money around. So, Ethereum's only $3,000 a coin. Well, it's about the same price as a share of Amazon stock. What has more behind it? Ethereum or Amazon stock, which, they got trucks because you see them on your street every day. You know they have a business because you bought stuff from them. They really exist. So you put 3,000 in a share of Amazon stock. It's like, okay, it exists. You put 3,000 in a Ethereum coin. It's like, okay.
Now, Colin, you shared an email or an article from the internet about a college kid that invested in crypto, but he managed to hit it big.
Yeah.
Unfortunately, he ended up not cashing out, and even still, as it all dropped in value. But do you want to tell the story? I'm sure you know it better than I do.
I think you hit the key point, right? He invests in it, he makes a lot of money, and then all of a sudden it goes the other way. And that's why I really, I think Frank makes a good point with, if you're going to put anything into it, it has to be a small percentage of your portfolio. It has to be money that, it's like going to a casino. If you take that money in there, if you come out of it, it's great, right? If you come out with a profit, if you come out with even just what you brought in, you should consider that a win. If you lose it, you should expect to lose it. You walk in the door expecting not to come out with anything, and you're just hoping you maybe make something, because the volatility on this thing is crazy, because it's literally, even when we have recession with stocks and businesses, there's floors, because at the end of the day, a company like Amazon can't drop to $0 unless it goes bankrupt all of a sudden, because at the end, it's still going to have assets. It's still going to have things backing it up. This thing could go to zero if everybody just decides, I don't want it. It's one of those things, I think, and then the other thing, it drops and it has no correlation to really what the economy's doing. It's just whether it's become too high a price for people, and they decide to sell it off. And I think unless you're really up on what the crypto community is doing, what happened to this college kid, he made a lot of money on it and decided to let it ride and lost it all. And I'm sure, I think he sold it off, but I'm sure if he had kept it, he'd be right back up there. And that's one of the reasons I really don't really think there's too many pros to it.
No, and sadly, he ended up with a huge tax bill on money he never got.
Right.
Well, I think, I refer to it as a trade, not an investment. Traders trade to make a profit, and they take their profit and they move on. I teach most of the international finance classes at Cal State Long Beach, and currency traders look to make a trade. They'll buy a currency or sell a currency. Hopefully you sell it, it goes down, you take your profit, you get out. You don't buy a currency and sit on it, because too much can happen. The market's too volatile. Just like, 52,000 to 47,000. Actually I think it went all the way down below that. Now it's coming back up. And so if you're going to get into crypto, buy it, take profits along the way, spread it around amongst other currencies, once again, diversify your risk. Which one's going to go up? Which one's going to go down? You don't know. What's Elon Musk going to tweet about next? You know, that to me is, you know, he doesn't even say he's buying currency. He just puts it in a tweet, and all of a sudden the value goes up, you know, 100%. It's that's not an investment. That's an asset you can trade.
Well, do you think cryptocurrency will ever be a good investment?
I think it'll hit the. I think compared to stocks, no. But I think what Frank's talking about, it could get to the point where it's like ForEx trading, and you're trading it based on what's the exchange rate between this and the U.S. dollar. But I think we've beat the horse to death here about there's no underlying value to this thing, so it's not an investment, it's a trade. You know, what do Forex traders do? They don't make a lot of money on each trade. They trade in high volume, they trade very frequently, and they're trying to turn a penny on each individual whatever currency they're trading, but they trade in such large numbers it comes out to, you know, I made $1,000, I made $100 on this trade. But it you know, I think Frank's getting to the point, it's not an investment. It's not something you do with any hope of holding for the long term.
All right. Well, gentlemen, thank you very much. This has been interesting. I guess before we say goodbye, do you guys any closing thoughts?
Well, I have a closing thought. I'd like somebody that sees this, who really believes in cryptocurrency, to come on and tell us why. You know, let's hear the opposite point of view. Why is it a good investment? Because it could, you know, there could be things we don't see. I don't know what they are, I'll be honest, but there could be. You know, we don't know everything. Colin might, but I don't. So different opinions, right? Whoever thought it would have got to $65,000? I don't think the most ardent supporters of Bitcoin ever thought it would get that high.
What was it P.T. Barnum said?
There's a sucker born every minute.
There you go. Well, on that sort of cynical note, gentlemen, thank you both for coming on and explaining crypto to us, and especially to me, because like I said, I had no clue.
I'm not sure we explained it that well, but
well, I feel like I know what not to do now.
Don't mortgage the house and invest in crypto.
All right. Well, thank you very much, guys, and I can't wait to do this again. We'll see. I'm hoping that we'll get some more questions from the audience, and I'll turn you guys loose on them.